How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on US dollar versus Japanese yen. Not much to say. I don't have much to say, honestly. I think that price is going to get to that 160 big figure level again. The last time the Bank of Japan had intervened, I think they will intervene again. I do think they will raise rates probably next month. Who knows until they actually do it? It's a probability that they will because the yen is really suffering and they need to do whatever it takes to get people back into Japanese yen so they can support their citizens. Right now, they're going through a lot. And hey, that's what happens when certain world leaders or people in certain positions hold a lot of power over a country's buying power or purchasing power, and things do impact them negatively. However, on a trading aspect, right, a more positive light, we can see all the yen crosses are buys, buy signals left and right. We said this from the beginning of the month that we're going to buy after down days. We're going to buy below June's opening price, and we're going to look for price to target swing highs or any efficiencies above the price action once we get in long. So far, we got in one, two, three, four. Today might make five. We don't know. In the next 4 hours, it could close down. I don't know. So far, we got four down close candles. Those are all opportunities to buy. And if you take it a step further, we had one weekly candle that was down for the month. Right here, the first week was down. And it was what? The higher swing low formation. Price continued to trade up. After the down weeks, there could be a buying opportunity if the market is in a bullish trend. A lot of people do not think like this. A lot of people come up with a lot of fancy terms to try to get into the market. It's very easy to plug yourself into the market, especially when it's trending and the fundamentals and the macros support the pair that you're trading. We said this during our Forex Fridays live. We said that a lot of traders like to favorite pairs simply off of instinct. You know, they just get into a pair, they probably had a couple winning trades with it, and now they're saying, oh, this pair is my baby. I'm going to trade it for the rest of my trading career. Well, that's not what professionals do. The professionals look at the macro data, they look at the fundamentals, and they choose, okay, should we be in this asset class? Should we be in Forex? Or should we be in crypto? Or should we be in stocks? Should we be in futures? Should we be in commodities? Should we be in precious metals? They do that. They don't just sit and put all their eggs in one basket. On this channel, you guys see me shuffle around many currency pairs. Yes, there are definitely times where I can stick to a currency pair back to back for certain amounts of months if the market is trending. And we know the yen crosses are definitely one of the exceptions since 2016. However, there are other pairs that are just not suited to be trending right now because the environment for the fundamentals is just not there. Too much conflict. It's two strong currencies going against each other. It is your best interest to pick a currency pair. Right? If you take anything from me, it would have to be this. You want to take a strong currency and match it up with a weak currency every single time. And you're going to try and filter out of all those strong versus weak currencies, which one is the most prime one to move? What is the interest rate between the two banks, between the Feds, right? Because it's a currency pyramid, it's two currencies. So what banks are they from, right? The Feds, the American Central Bank, and the BOJ, the Bank of Japan, right? The Central Bank of Japan. You compare those interest rates and you see, is there a strong interest rate differential between them two? Okay, let's move on to the next up. What about the seasonal tendencies? Does it favor this pair going higher or lower? Or is there conflict in the seasonal tendencies? So you got to filter these things through. You just can't pick a pair and say, yo, we're going to trade it next month because I just like the pair. That's not objective, my friends, right? We don't want to be subjective. We want to be objective. We want to have measures and metrics so that we can have more of a consistent trading journal and a more consistent trading equity curve. When you start becoming more objective, you're going to find a lot more success. Things are going to be a lot stressful, and you're going to be able to fall back a little bit and let the market do its thing. You don't have to fight the market. A lot of people trading the majors are fighting the market. Hopefully, you found this insightful. Peace.